Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to look at some new income ETFs now with our ETF strategist, Eric Dutram, who joins us. ETF market seems to be heating up just a little bit here in the fourth quarter.
I think so. We're kind of seeing a ETF launch bonanza as of late. With
Really?
over 40 products have launched already this quarter, and we've seen 125 roughly launch since the beginning of the year. So we've seen pretty strong number of launches just in the past couple of months, and we still have the rest of December.
Yeah.
And actually, we've seen a couple launch just this week. So clearly, things aren't slowing down as we approach the holidays here. And one of the big focuses has been on foreign stocks and also income products.
Yeah,
These have
I see
kind of
that.
led the way in terms of the new launches over the past couple months.
All right, and you're going to talk about income
That's right.
here with us today. And so what's the first new income fund?
Well, we got NOBL, and this is from ProShares. This is kind of a Dividend Aristocrats fund, and it holds about 50 or so stocks.
You have to be an aristocrat to get into it?
You don't have to be
Because we
one
don't
to
have
get
those
in.
in this country.
Well, we have Dividend Aristocrats, which are companies that keep raising their dividends
Okay.
year after year for at least 25 years. So you're going to get a lot of your large cap names that have been really stable over the years, like Coca-Cola, companies like this that are always increasing their dividends. Unfortunately, this focus doesn't really give you a high yield. You're just getting companies that increase their payouts year after year. So the dividend yield here is only about 2%, but this is going to be pretty comparable to SDV and VIG, which are two very other popular products in the income space that have the same aristocrat approach.
Okay, and then another one on the list has the ticker RDIV.
That's right. This is a revenue shares product, and all this company's funds, they focus on the revenue weighting, and that means instead of focusing on market cap weighting, companies that have the most revenues receive the highest weight. So this approach is going to give a lot of utilities, a lot of telecommunication companies. You're going to get AT&T, Duke. These are kind of the biggest holdings here. And the revenue weighting methodology, because it focuses on companies that do a lot of revenues, not necessarily a lot of profits, you're going to get a lot of low margin companies. This is just something to take note of here. The yield is pretty high in this product, around 4.7%. Expense ratio is just under 50 basis points, but it's a pretty solid income choice, and the revenue weighting methodology might be an interesting pick for investors looking to get a little bit away from the market cap focus, but still keep with the high yield theme.
What about investors who want to be more diversified?
Well, if you're looking for bonds, we got this last product from Riverfront, and this focuses on high yield securities and midterm debt in the corporate market. So you're going to get about a five-year average maturity in this fund. SEC yield here is about 4%, so it's another strong choice. The fees are pretty low in this product too, so it could be a very interesting pick from that perspective. And since you got an active methodology, you don't have to worry about as much as some of the issues, and they can actually hold bonds to maturity, which is something that's relatively rare for a lot of the other fixed income products out there. So this could be an interesting choice if you're kind of concerned about the bond market but still want some fixed income exposure, especially with something that has a little bit of yield.
So the reason that this fourth quarter is a little bit more active on the new issue front as far as ETFs is more a function of what's going on in the market?
I think so. We've seen very strong market performances as of late, and I think a lot of ETF issuers want to kind of get in on that and try out some new ideas. And all these income funds are kind of taking the income theme, but putting a little bit different spin on it. Because investors still clearly want income in their portfolios. They're becoming a little more hesitant about the traditional methods, such as REITs and other products like that have kind of been beaten down and could be really hurt by tapering concerns. So I think these might be a little bit different way to access income, but that might not be as hurt as some of the other like REITs and products like that.
All right, do you own any of these?
I do not.
All right, check out other interesting ETF articles in the ETF section of Zacks.com. You can link to it right off the home page. With Eric, I'm Terry Ruffalo.